Okay, let's start then. It's 33. So, as I said, I'm going to make a presentation about candlestick charts, and you will see that candlesticks can give you really important and pertinent signal to help you in your trading. So here is a summary. We are going to start with an introduction. I'm going to present some basics, candlestick basics, some candlestick patterns, because I'm going to talk about candlestick individually and candlestick group. You know that a group of 2, 3, or 4 candlestick can form a pattern, and also multi-candlesticks patterns. And to finish, I'm going to present some example from my platform. Here's the introduction, so you know that you can display your chart using bar chart, as you can see on the screenshot. Okay, it's giving some information like candlestick, but visually it's not so convenient. What about line? Line. Here you can see this is the chart. It's actually just a line, so it's giving closing or the average exchange rate. And here we are, candlestick. Candlestick are very useful because they are giving some important information: closing price, opening price, closing price, the highest price and the lowest price. So on the left, a bullish candlestick. Why is it bullish? It's increasing because the candlestick is green. A green candlestick is a bullish candlestick. At the top you can see the higher shadow, this thing, and at the bottom the lower shadow, and in the middle the body. So actually it means that we opened at this price. Okay, you can imagine I don't know, 1, and here is the closing price of the candlestick at 1.1, and during this period, because you know a candlestick is representing the exchange rate during a certain period, can be 1 minute, 1 hour, 4 hours. So during this period the exchange rate did reach this top and the bottom here. So open price, highest, lowest, closing price. And this is quite the same logic for the bearish candlestick. It's red candlestick, so it's bearish. The body, higher shadow, lower shadow. So the opening price is at this level and the closing price at this level. The highest, the lowest. So now you see that one candlestick can give you 5 important information. The color, if it's green, it's bullish. If it's red, it's bearish. The higher shadow, the highest priced. The lower shadow, the lowest price. And the body, if it's bearish, the bottom of the body is opening price, and the top of the body the closing price. And this is the contrary for the bearish candlestick. Okay, just a reminder: highest, closing price, opening price, lowest. And the contrary, here is the closing price and the opening price for the bearish candlestick. Okay, now what about candlestick patterns? Let's start with big bodies. Here you can see 2 massive body. As I wrote, a candlestick with a massive body is created by a high pressure. By a high pressure from the market. If it's green, it's bullish. If it's red, it's bearish. In this example, on the left of the slide, you can see screenshots. This is an example of a massive bearish body, massive bearish candlestick. Okay, as you can see, that I would say that this candlestick is dragging down the exchange rate. Now let's talk about short bodies. Spinning tops represent an hesitation from the market. Bearish and bullish are pushing. There is a confrontation, I would say a fight between sellers and buyers, bearish and bullish traders. So it could be interpreted like a hesitation, but also like a very tight fight between bearish and bullish. And once again on the right you can see a nice example full of spinning top, 1, 2 and 3. This one is the best example. Now dojis represent an high hesitation. Here you can see this is a perfect doji, because there is no body and the line is the middle. So this doji represents a full hesitation, total hesitation. Now the other one is a dragonfly doji. There is some hesitation, but it's still doji giving you a bullish signal, can announce a bullish reversal in a bearish trend. And the contrary, the gravestone doji, this one is giving a bearish signal, bearish reversal in a bullish trend. And now the long-legged doji, if the body is close to the top, it will give you a bullish signal. If the body is close to the bottom, it's going to give you a bearish signal. And also very important, as I wrote, long shadow represents a reliable doji. If there is a long shadow, it's good. It's providing you with a reliable signal. But on the contrary, when the shadow is short, the reliability is not so high, so you better stay away. Now the Maru-Bozu. So here we saw big bodies, so it's a candlestick with very short shadows and a big body. Here is a Maru-Bozu. It's quite rare to spot a Maru-Bozu on a chart, but it happens. It's not so rare. So here you can see there is no shadow. It's just a body. The Maru-Bozu, very interesting candlestick because it's giving a very strong and very reliable signal. It's a strong signal in a trend. You can see here a bullish trend, finally a reversal, a Maru-Bozu, and the Maru-Bozu is strongly dragging to the bottom the exchange rate. It's very, very powerful. It's like big bodies, but even more powerful and giving a more reliable signal. And then, hammer and hanging man. Hammer and hanging man announce a trend reversal. On the right, you can see a hammer. And hammer announce a bullish reversal. On this example, you can see that the hammer is green. It's a bullish candlestick, but we don't mind about the color. We don't mind about if it's a bullish or bearish candlestick. Okay, it's about the position and the shape. Okay, here this is an hammer. If it's at the end, of a bearish trend, it's giving you a signal, a bullish reversal signal. And as you can see, after the hammer, reversal occurred. And now, actually, it's quite the same candlestick, but the position is totally different. Okay, the hanging man is like the hammer, but the position here at the top. It's at the end of a bullish trend this time, and it's providing with a very reliable bearish reversal. Just after this candlestick, you can spot. You can see a very nice bearish trend. Then shooting star and either inverted hammer. Shooting star and inverted hammer. Inverted hammers are reliable to announce a trend reversal. Once again, it's like hammer and hanging man, but this time it's different. If it's at the top, once again, we don't mind about the color. If you spot this kind of pattern, this kind of candlestick at the top, at the end of a bullish trend, it can announce, you can anticipate a trend reversal. So in this example, from a bullish trend to a bearish trend. And then another example with inverted hammers. Here it was quite flattish. Finally, a very strong bearish candlestick, an inverted hammer, and finally a reversal, bullish reversal, a correction, a consolidation, and finally, once again, a bearish trend with 1, 2, 3, 4 candlestick, and once again an inverted hammer, which announce a trend reversal, so from bearish to bullish. Now let's talk about multi-candlestick patterns. Let's start with the morning star. The morning star, very interesting pattern because it's quite common on charts, and I would say very simple to spot. Okay, and on the chart, so you can see a classic bullish reversal announced by the morning star pattern. So actually the morning star pattern is composed of 3 candlesticks. The first one is a massive bearish candlestick, a short body or a doji, can be a doji, so strong bearish candlestick, a short body or a doji, and the last candlestick is a strong bullish candlestick. And this group of 3 candlesticks is a pattern called morning star, and it announced a bullish reversal. Here you can see it was bearish. Finally, the morning star. Sorry, just a few seconds. Excuse me, but my screen is frozen. Okay, here we are. Sorry for this technical issue. Anyway, so I was presenting the morning star, which announced a bullish reversal composed of 3 candlesticks, massive bearish, short body or doji, and finally a massive bullish candlestick. And then the contrary, it could be inverted morning star, but this time it's called evening star. It's quite the same pattern, but this time the first candlestick is a massive bullish candlestick, a short body or a doji, and finally a bearish a massive bearish candlestick. And this time, this pattern announced a bearish reversal from a bullish trend to a bearish trend. Okay, it was quite reliable this time. And now some example on my period point, and then I'm going to switch on my platform, MT4 platform. Let's start with big bodies. Here you can see two big bodies. The first one is a bearish big body, dragging, putting the exchange rate under a bearish pressure, and this time the bullish candlestick. Now a doji, full hesitation from the market, okay, regarding about doji, and just after the doji, it's a perfect doji representing a full hesitation. You can see a strong impulsion. So just after a period of 4 hours, as you can see at the top on the left, here you can see it's 4 hours. One candlestick represents 4 hours. So after a period of 4 hours, a period of full hesitation, the market finally took a decision, a very bullish impulsion occurred. And then the Marubozu, it was quite difficult to spot a Marubozu. It was on Euro USD 4 hours as well. Here you can see it was bullish, bearish, bullish, and finally a Marubozu which drag. You can see the continuation of the bearish trend. Here it's an hanging man. Even 2 hanging man. It was a very strong bullish trend, 2 hanging mans, and finally a reversal as expected. This time an inverted hammer, the bearish trend, an inverted hammer, and finally a bullish reversal. Now let's switch to my platform. So I'm going to show you two fresh patterns. The first one is on Euro USD. Yeah, on Euro USD. Here it's a very nice morning star. Because the short body or doji is at the bottom. So here you can see clearly a bearish trend, the pattern, the morning star, first candlestick, a massive bearish candlestick, a short body, a massive bullish candlestick. Just after a correction, yeah, it was not so clean, but finally we got this bullish impulsion. Okay, just after the pattern, we gain 48 pips. So on Euro USD for one lot, it represents around $500. Okay, $480. And now another example on AUD USD, Australian dollar, US dollar, and this time it's an evening star. Okay, because doji. This time it's a doji, not a short body, is at the top, so it's evening star. Once again, it's really clear. You can see a bullish trend here, the pattern, the evening star, and finally a bearish reversal just after the pattern. We finally took here, I would say 80 pips. Okay, 80 pips maximum. So at least we may have enjoy 60 pips. So 60 pips on AUD USD, it represents $600. And it was my last example. If you are really interested about candlesticks pattern, I advise you to go on your chart and try to spot this kind of patterns and candlesticks that I was showing to you during this presentation. I think it will be a good exercise and really convenient if you want to spot a pattern at the first sight, okay, to not wasting your time. Okay, it was so the last examples. If you have any question, don't hesitate to send your question through the chat. If you want to register to the next webinar, it's quite simple. Just have to go on the website, click on Education, Webinar, and here you can access to the schedule, to the program. And as you can see, next week, on Tuesday 6:30 or 5:30 for Nigerian, it will be 5:30 and 6:30 for South Africans. So next week I'm going to present a webinar dedicated to carry trading. So it's a very interesting trading strategy. And carry trading is more related to long-term speculation than short-term speculation. It's a strategy that you can process on a few weeks, few months. A question from Christian. Please, can I have a complete PDF file of this training? Sure you can, Christian. You just have to send a request to my email address that I'm going to send to you. Okay, I just sent through the chat my email address. It's jonathan.moisan@gkfx.com. Okay, so if you want to get the PDF or the recording, just send me a request.